Hey everyone, this week we're going to talk about tax expenditures and market structures, going off of some of the things that Desmond talks about in the reading. As usual, I'm not going to recap the reading, but give them a little more depth on a couple of issues. So, in thinking about tax expenditures, there's two main mechanisms by which the US government and other governments can use money to promote activities. One is direct subsidies. So, these are things like Pell Grants for education, SNAP, Supplemental Nutrition Assistance Program, commonly known as food stamps, Social Security, right? Like, we're giving money. SNAP's not quite money, like there's some restrictions in terms of how it works, but generally speaking, you're giving people things, those things have a monetary cost, right? Another way to do things is tax preferencing things. So a 529 savings account, someone puts money in and that money is not taxed. And of course, that not being taxed, had it been taxed, the government then would have that money, which could go to paying for other programs or having a smaller deficit, right? So, from an accounting perspective, in terms of direct expenditures and tax expenditures, both are essentially expanding your deficit or taking away from other priorities, right? There's really no big difference here, except in the implementation mechanism. So hopefully you're at least somewhat convinced that these really are spending. They have real effects. We can call them tax cuts if we want, but that's a nomenclature thing. They're not across the board generic tax cuts. That's not what I'm talking about here. I'm talking about specific carve outs. So if you are a proponent of this, you would probably use the phrase tax cut. If you are an opponent of this, you would probably use the phrase tax loophole, right? Although the majority of these ones are not little known loopholes, little known perhaps by the general public, but they're very big, broad things. They're just not talked about or thought about all that much. So why do we have so many tax expenditures? And I'm going to get to the scale of these in a minute because it's a lot. Well, Democrats get to promote priorities they care about through tax expenditures. Republicans get to call it a tax cut. And Congress doesn't have to pass them annually in the budget, which is a big benefit for both sides, right? They can just go and say, hey, it was passed once and it just stays there. Okay, so when I say these are big, I'm talking bigger than Medicare and Social Security big. Bigger than them separately, not combined. Over $1 trillion in terms of tax expenditures, right? So what are these giant tax expenditures? I'm going to get to specific examples, but the second really important thing to understand about tax expenditures is that they are skewed very, very heavily towards the wealthiest. 24% of tax expenditures go to the top 1%. Almost 60% go to the top 20%, right? This is very different. Well, it's different than direct spending, right? And it's certainly, I think, different than the picture that is in most people's minds when they talk about government spending and the distribution. We normally talk about a lot of spending as redistribution. And this is also a form of redistribution, but in a different direction, redistributing towards people who already have more income. So how does this work exactly? Well, you have tax expenditures that exclude health insurance that people get through work. You have exclusions for pensions and savings account, and these skew very heavily towards the wealthy who put more into retirement savings account. You have payroll tax expenditure, which is above a certain, well, there's several forms of that, but one is just above a certain level, there's no tax on payroll. And then, of course, there's a preferential tax rate on capital gains and dividends relative to other forms of income. There are a few of these that are probably the most talked about that, in fact, skew towards the lowest quintile. Child tax credit, earned income tax credit, right? Those are the big two that we talk about in terms of anti-poverty programs. Mortgage interest deduction is also on here. Lower relative to some of these, but this is still a huge amount of money. And I think we've talked about this before. We spend much more on mortgage interest deduction for this highest quintile, the top 20%, than we do on housing programs for the bottom 20%. We just don't talk about this top 20% because we hide it as a tax expenditure. Okay, in addition to tax expenditures, I just want to point out that markets don't come from nowhere. They are governed by agreements we have about, how to make trades, how to enforce contracts, weights and measures, all of that stuff. But like, these structures also have a strong influence on income. We might think of this as the pre-distribution of income as opposed to like redistribution of income. So how tight the labor market is matters. Real wages have been rising at the bottom over the past 4 years, largely because unemployment has been quite low. And so, what are the financial regulations and the structure of the market? How long are patents and copyrights good for? 2 years, 20 years, indefinitely? What sort of corporate governance affects CEO pay? What sort of barriers to entries are there for highly paid professions like passing the bar or becoming a medical professional? It's like barriers to entry, I want to be clear, like they serve two functions. One is a very good function that we think about, which is you don't want someone incompetent doing surgery on you, right? Like we don't want anyone to just set themselves up as a surgeon and get to do surgery on the basis of a good marketing operation, right? Like we want someone to certify that they actually know what they're doing. But the other thing that barriers to entry can do, and in fact actively do in many of these professions, is artificially restrict the number of people who can do them. One of the big barriers here is, say, like not allowing surgeons from other countries to come in where there's demand, right? Because that would in fact decrease the pay of surgeons who are already here, because it would lower demand for surgery and lower like these really long waiting times. So like all of these are in fact decisions and trade-offs between like making sure we have barriers to people entering and setting up fraudulent operations, but also like if you have really high barriers to entry or regulatory capture, you wind up in a situation where the people who are benefiting from those barriers to entry want to keep them up so that they don't get any new competition. And then, of course, unions have a big influence on like what proportion of revenue to a company goes to workers versus middle management, upper management, shareholders, etc. Right? So, like all of these things matter for this final distribution of income, well beyond just like the taxes and transfers that the government does. Okay, that's all I wanted to talk about this week. Hope you're enjoying the Desmond book and look forward to talking about it with you online.